Good evening. Indian stock benchmarks finished with modest gains at the end of a choppy session. A suspension of reforms in the retail sector partly countered growing optimism about the upcoming European Union summit. The BSE Sensex erased more than 100 points from the day's high due to a late bout of selling. The NSE Nifty came almost close to 5,100 before retracing. At the high points of the session, the Sensex touched its highest in 3 weeks. The Sensex gained 71 points to close at 16,877 and the NSE Nifty gained 23 points to close at 5,062. The IT index was the best performer among the 13 sectoral indices in the BSE, while the pharma index was the top loser. Market breadth was just about positive. The BSE small cap index and the BSE mid cap index rose by approximately 0.2% each. The Indian benchmarks opened more or less flat but managed to pick up pace shortly afterwards before retreating slightly in the late morning trade. Both the indices hit new sessions high in mid-afternoon before losing some steam in the last 1 hour. The Indian markets underperformed other Asian counterparts due to rising optimism that Eurozone officials will be able to draw up a concrete package of reforms at Friday's European Union summit in Brussels to quell the region's crippling credit crisis. European officials are reportedly discussing the possibility of significantly boosting the region's ability to fight the debt crisis by operating 2 bailout funds instead of just one. Germany and France have already agreed on treaty changes to enable a tighter fiscal union among euro area members. Also, the ECB is likely to reduce its benchmark rate to 1% from 1.25% on December 8, according to The Economist. For the Indian economy, though, a decision by the government to put FDI in multi-brand retail on hold has raised some concerns about the UPA2 regime's ability to push through important reforms. This has only added to growing perception of policy paralysis under UPA2 regime as it struggles to cope with a string of corruption charges and sticky inflation. India's slowing growth, high inflation and fiscal deficit are 3 major causes of concern for government, said by Finance Minister Pranab Mukherjee in Parliament today. Widening current account gap and rising subsidies are also cause for worry, he said, but added that basic fundamentals of the Indian economy are still strong. Thank you. Wish you have a great evening ahead.